Hello again, Maverick traders. Welcome out to your market roundup. It's May 19th. Corey here with you. We're always going to take you through meaningful news, what's moving the markets, why it's moving it, and where, as the great Wayne Gretzky says, we want to skate to where the puck is going. So we're looking for what is heating up, what is cooling off, and then trying to highlight our very best strategy ideas.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so markets were kind of interesting today in that we started with a gap down and then we proceeded to recover back to neutral. Dow, S&P, NASDAQ, and Russell all relatively unchanged. Oil basically unchanged. Gold was the big winner, up 1.4. Why were these rallying? Well, we know that over the weekend there was a debt downgrade, right? And so the U.S. had been downgraded once before by one of the other credit rating agencies, I think back in 2011 or so. But 2 out of the 3 credit rating agencies still kept the pristine AAA perfect rating for U.S. government debt. And over the weekend, Friday night after the close, Moody's came out with a debt downgrade for the U.S. Futures shot a little bit lower, not dramatically, down 1% or so. Certainly not the same reaction as back in 2011. Now, the reason that this rings a bell for me is back in that period of time, one of my best friends growing up was a Navy SEAL, SEAL Team 6, and his name was Jason Workman. And you can go do a Google search, and he was part of that SEAL Team 6 that got shot down, and that was the very same weekend that we were kind of finding out about that and heading to a funeral and doing all those things as the debt downgrade. And again, brings back some memories that, well, not so great. But do yourself a favor, go read up about Jason Workman, incredible person. Now let's get back to the markets. So JP Morgan Chase CEO talked about earnings growth collapsing. Ray Dalio, the founder of Bridgewater, the very famous all-weather portfolio, well, he says the risk to U.S. debt is even greater than Moody's says. So these are pretty negative tones, but yet the markets rallied higher. And so we have this sentiment turning negative, but price action remaining positive. And to a certain extent, I trust price more than I trust anyone else's opinion or their commentary, because the skeptic would say, well, maybe they're talking their book. Maybe they're trying to talk the markets down. Maybe this, maybe that. Advanced decline line, 54% of stocks advancing, 46% declining. So again, pretty neutral day. 50-period moving average has turned very bullish at positive 72% above that 50 MA. So here's the S&P 500 chart, and if we look at the S&P 500, you can see we're a little extended away from those short-term moving averages. You can see the gap down and then the bounce back. If we look at the S&P on a longer-term scale, and this was highlighted by one of our other traders here at Maverick, and I'm copying their work, but this is a little area of concern in that it's the old trend line, and so once broken, now it becomes, old support, new resistance type of idea. Are we going to struggle around this? It would make perfect sense for us to kind of consolidate, let these moving averages catch up, and then maybe go up and above if we are in fact going to do that. I mentioned, so I was gone last week. My girls had cheer in Florida. So I did the market roundup usually on Mondays, but the last one I did was 2 weeks ago. We talked about back here, it was my opinion that we would kind of shoot above kind of this fake out push and then plunge. But I said at the time, look, this is the make or break area. If the markets don't fall back hard here, you're going to make another push to the upside. This is, this is the key level, and we didn't. We reversed, we pivoted upward, right? So I would say the same thing about that resistance zone that we're at. This is a key level. If they don't react, which I think we will because we're quite extended, we'll probably chop around here for a little time. But if it doesn't stop and you kind of get above this, you just have to give the markets credit where credit is due, right? If we can continue to push above that, well, it is a bull market. It is trending higher at this time, up above the moving averages and such. So energy, deeply, deeply red today. It was really the worst sector out there. Chevron, Exxon, Conoco, many of these underperforming. Otherwise, you just had a mixed bag. I would say other than energy, everything was a little bit, some green, some red, nothing too significant happening. Again, markets are pushing higher. They have been for the past couple of weeks. So obviously, it is a little harder to find great bearish setups with a lot of stocks now getting above their 50 MAs and building bullish chart patterns. But let's look at a few different charts here together. On the bullish side, I had Crocs. This is a stock that has broken out above the resistance zone, did so on increasing volume, this whole breakout surge. And now we're giving a little pullback back to it. So we'll see if we can pivot and turn back up. But Crocs could be a bull pullback rally setup, right? You've got a upward sloping 20 and 50 and a recent crossover, some real bullish characteristics there. Nordstrom's price action today was interesting in that it had a big volume and big volatility day. They tried to beat it down and it rallied all the way back up. These types of reversals tend to be pretty good and pretty powerful. I think Nordstrom looks pretty darn good. JWN for more upside. On the bearish side, looking at things that are underperforming the market and the sector, remaining in bearish chart setups. And here is a descending triangle pattern in ABR, Arbor Realty. Next stop, maybe a push below that support level. So if we're looking at bearish candidates, I think it makes sense to be a little bit conservative with targets in both on bullish and bearish side, but certainly on the bearish side. Be conservative with how far you're expecting something to fall, because ultimately the markets right now are rising tide lifts all boats. So simply put, the bulls are looking better than the bears. Market sentiment is more bearish, but the price action is still bullish, and the price is truth. That's how you get paid. PMI data comes out on Thursday. Earnings this week, we've got Home Depot and Lowe's. We've got Palo Alto, Snowflake, TJX, Target. Usually when these retailers like Home Depot and Target and all of these come through, that's the tail end of earnings season. So you can tell that earnings are starting to wind down as you get into retail stocks there towards the end. Hope you enjoyed the market roundup. Everyone have a great week, and we will see you next time. Goodbye, everyone.